And this agency, this contemporary issue in agency banking is in the intermediate level. And let me start this lecture so that I don't waste our time. What is contemporary issues in agency banking? We need to know it before we just start the lecture. It refers to current challenges and development that is affecting the operation and growth of agency banking system, not only in Nigeria but worldwide. I will be having a brief explanation of contemporary issues in banking using the listed points. Digital transformation in financial services
Okay.
is one
Sorry,
of the
sir.
topics we are
Should
going
I
to
share
look
my
at.
screen for your slide, or
Yeah,
will you do that, sir?
you can share it so that they can follow.
Okay, sir.
Yeah. Hello, are you on? Can you hear me, Israel?
Yeah, sir. Just give me a minute, sir.
Okay.
Okay, sir. You can go on, sir.
Yeah. Thank you very much. Yeah, I was trying to define what contemporary use in agency banking is, and I said that we just want to look at current challenges and developments that will affect the operation and growth of agency banking system, not only in Nigeria but worldwide. And in this contemporary use in agency banking is an intermediate level in the Charter Institute of Bankers, and it has been broken into 7 parts. We are having the digital transformation in financial services. We are having the benchmarking fintech agent services with bank-driven agent services. We are having increasing competition. We are having a cultural shift, as well as regulatory compliance and major banking regulations. And also, towards the end of uh, the path, you will see changing business models. So these are the areas we are going to cover. And the park is so bulky that I just try to manage the sum. I want to summarize it, and we are going to look at most of the key points we need to know there. And let me start with the digital transformation in financial services. What do we want? What do we mean? We don't want to look at the rapid adoption of digital tools as it is shaping how agency banking works. And agents now need to use mobile apps like devices and online platform to serve customers. But many faces certain and many challenges with digital literacy, as well as connectivity and system reliability. And the next one we'll be talking about is benchmarking fintech agent services with bank-driven uh, agent services. We'll look at here that fintech are redefining speed. That is, we want to look at users' experience and flexibility in agent services. And when compared to traditional bank-led agent models, we realize that fintechs often provide faster and more customer-friendly services that will be pushing banks to innovate or risk losing relevance. And the third aspect of this our study is increasing competition. What we meant here is that as small banks and fintechs enter the agency banking space, competition among agents intensifies. And this can also lead to oversaturation in certain areas and conflicts over pricing, commissions, and service delivery are those things that we are going to cover under the increasing competition. And the fourth one is the cultural shift. This is a gradual move from traditional banking habits to digital and agent-based models. While some customers embrace these changes, others, especially in rural areas, may resist due to lack of trust or familiarity with these agents. And the fifth one is the regulatory compliance. Here we look at agencies, how it must adhere to strict regulations, such as know your customer, the one we call KYC, data protection, as well as anti-money laundering, AML rules. This also increases operational complexity and demands a regular training and oversight. The sixth one is the major banking regulations. What we are going to look at there will be new policies from central bank and regulators that's affecting how agents operate. And these regulations it is involving limits on transaction values, agent registration, or reporting requirements, which can either support or hinder agent banking growth. And the last one is the changing business models. Banks and fintechs are rethinking their approach to service delivery, and as a result, many are now relying more on partnership with agents and third-party services. Especially what I mean by third-party services, I'm talking about the providers. And we also look at the shifting from physical branches to a more decentralized one, which is cost-effective. In the course of this lecture, I will tell you many things that will assist you to make sure that you are able to pass this exam. Now, let me go straight to the business of the day. I'm going to take them entirely as I've explained them. I'll be starting with digital transformation in financial services. You know, the banking industry has gone through major changes due to digital technology. And this digital transformation is the thing we want to actually look at. The first one started in the 60s, especially 1960s. And this is the start of computerization of banking services in Nigeria. And banks here began using electronic data processing, replacing manual work with computers. Example is instead of updating ledgers by hand, banks now started using software to manage transactions that make their work to be faster and more accurate. We move from that stage to the 1970s to 1980s, which we call the introduction of ATMs. And these automated teller machines gave people 24/7 access to their money. Example, when customers could withdraw cash or check balances of their accounts anytime without visiting any bank branch. And in the 1990s, that is the beginning of online banking. Here, banks launched web-based platforms that is allowing users to handle finances online. Example is when people will transfer money or pay bills using their home computers. And we now move to the other sector, that is the 2000s. That is the growth of mobile banking. It is this time that we started seeing the spread of smartphones that led to mobile apps for banking. And the example is when the users will now be able to deposit checks by snapping a photo or get instant balance updates via apps. Then in the 2010s and beyond, AI and fintech began. And this is where we start to notice that artificial intelligence, AI, and financial technology firms started to transform banking services. And this is where we are. And example is that AI, like the chatbots, answering customer questions instantly. People will be asking, what is happening? You are given the chatbot a particular question and it just give you the answer immediately as if somebody is responding. And also we look at the fintech apps like the PayPal or Venmo that enable fast digital payment without banks. Now, what are the impacts of all these things? Impact of these changes, for example, the efficiency and cost savings. It is here now we realize that digital system do tasks faster than humans. It reduces errors and costs. Then another impact is the area of better customer service. People can now bank anytime, anywhere, with personalized services based on their behavior. And another impact is in the area of financial inclusion. Mobile banking and digital tools now help people in rural or low-income areas to access banking. And that is when you can see a farmer using mobile money to receive payments in a village without even a bank. And another important impact we have is the security improvement. The use of biometrics, multiple factor authentication, and encryption protect our accounts these days. And the risk as a form of impact is when we now started to see cybersecurity threats and privacy issues that will require strong defenses and new regulations. So with this, what will be our future outlook? Our future outlook will be that we will be looking at new technologies like blockchain that we can use to secure transactions, IoT, smart devices, and quantum computing will further enhance banking by making it even faster, safer, and more personalized. Now, let's go to the second aspect of our course, and that is the benchmarking fintech agents services with bank-driven agent services. Now, we are going to break them down to about 4 areas that we are going to look at. Number one is that we want to look at technology infrastructure. Fintech uses a digital first model built on cloud computing, AI, and data analytics to quickly adapt and deliver personalized services. Example is when we look at Revolut uses. And what I mean here is that the Revolut itself uses AI to provide customer financial insight. Now, under this technology infrastructure, we want to look at traditional banks. And these traditional banks, they rely on legacy systems and physical infrastructure, which slow down innovation. We could remember, I don't know whether any of you have either experienced this. In the olden days, if you want to go to the bank, it's a business, it's a one-day business. If you want to go and take maybe 5,000 or even 500 naira, it's a day, a whole day business. You have to go there, drop your check or you withdraw form. They will give you a tally. You cannot go and do any other thing you want to go. Some people will go to the market, go and sell, and now come back, right? And this particular era is the time that we are not even feeling anything about technology. So you see people coming back at times, and most of the time, this issue has even resulted to fraud and what have you. So I'm not going to that. Now, the next stage you want to look at under the benchmarking of the fintech agent services accessibility. Now, we realize that fintech offer 24/7 access via various apps and websites, and this one can even reach any area in Nigeria, especially the remote area, with user-friendly interface. These apps, they are user-friendly. It will even be showing you what to do, right? If you want to do withdrawal, it will be telling you, giving you step by step how you can access your money. For example, like the Futa Wave. These Futa Waves enable payment across African country with just a smartphone. Instead of you be looking for you want to import now from maybe any of the African countries, you want to go and be obtaining from them in the bank, which can take for days, because they have to they have to help you to, the CBN will have to help you to bid through your bank, and all these problems, they are no more there this day by the use of floater waves. Unlike our traditional banks that depend on the physical branches, this one has been even limiting access for many and also offering less flexibility. So we have looked at that, and let's just look at the cost effectiveness of this benchmarking. Fintech operate at lower costs, no branches, lean teams. The staff are so small in operating these fintechs, and they are also offering lower fees and competitive rates. Example is the Square block, the Square, that we call blocks, that provides affordable POS system for smart businesses. Also, we have a traditional bank. I'm comparing them now to the traditional bank that face higher costs from branches, staff, and older system, and making them to be less agile or affordable. So, and let's look at the case study. Let me quickly highlight a case study here. Like the Revolut. The Revolut offer low-cost global transactions and personalized budgeting tools. Chase Bank combines digital banking with extensive branch network that maintains a traditional model, whereas the Square block simplify businesses and services through payment, payroll, through tech merchants, whereas the Flutter Wave power cross-border payments in Africa. And this have always been boosting inclusion and service model comparison. Our models now. Number one is that we want to look at as fintech agent services. What the fintech agent services will do there is that they are focusing on digital banking, peer-to-peer payments, robot advisor, crypto services, digital lending, and budgeting tools. They also prioritize speed, personalization, and innovation. Ideal for tech-savvy users and undeserved communities. That's under the fintech agent services. The other one is the bank-driven agent services. This one, they have been offering in-person banking, loans, safe deposits, boxes, financial advice, as well as wealth management. And this has always been relying on, the operation has been relying on trust, personal relationship, as well as stability. And the customer preferred by customers that are seeking face-to-face services and traditional security. What are the impacts and the challenges also? When it comes to the issue of fintech impacts, there is increased competition, there is a broader financial inclusion, greater efficiency and speed, as well as improved financial literacy. That is the impact. Then the challenges of fintech. The challenges of fintech has been burden of regulatory hurdles and cybersecurity risk, the issue of gaining customers' trust, as well as market saturation. We have looked at the impacts of the impact, and let's look at the traditional bank challenges. In the traditional one, there is high operational cost, and before you pay staff, before you pay electricity, there are so many operational costs that have been embedded into banking. And another challenges we are having with the traditional banking is that there is always pressure to modernize. People will be agitated. Can't you look at your peer? That I'm not going to refer to any bank now. Be referring you to your peers. That this is what they are able to do. And the fintech also, we are under the traditional bank challenges also, we are having fintech petition. The fintech have been pressurizing the banks generally because they are able to make so many things to be easy to do, especially when we are looking at the area of the 24/7 transaction models. What is our takeaway here? One of our takeaways is that fintech are tech-driven, and there is a accessibility, and also there is a cost effectiveness. And if you look at fintech generally, it's now a fast-moving industry. For the traditional banks, though they are stable and there's relationship-based, but when it comes to the issue of services, they are very, very slow. And the operation of traditional banks is always costlier than the fintech ones. Then let's look at the future success. The future success lies in hybrid models, blend digital innovation with trusted services. Competition in agency banking. How do we go about this? We start by looking at competitive landscape in agency banking. And here I'm going to tell you about the evolution of agency banking. Traditionally, they are being led by banks using local agents to serve remote areas. And now, it is now being transformed by Fintech by offering a faster tech-driven services. But who are the key players? The key players of this agency banking is traditional banks, fintechs, and non-traditional players. For example, like the telecoms, the e-commerce firms. Most of the time, most of these fintech solutions that we have, they cannot run without most of these our telecoms. So, what are the impact of fintech? The fintech has been able to introduce to us mobile apps, digital wallets, as well as AI chatbots, and they have been serving the users and financially excluded groups. The I want to look at is the area of technology's role. Technology to enhance efficiency as well as personalized services and access to our banking services. Also, we are looking at challenges for banks. What are the challenges for banks? One of the challenges that banks should try as much as possible to see that they modelize their systems. They should be able to partner with fintechs and be able to improve customer experience so that they'll be able to stay relevant in the industry. Also, we have regulatory influence. Regulators also promote financial inclusion and tech adoption by asking the operators, telling the operators what they should do and what they should not do. And next thing we want to look at under this competitive landscape is the area of customer expectations. The users always demand that the services they want to receive from the operators they want the services to be very, very speedy, should be convenient, and it should be personalized. So the services they want to get is that the services must be. Let's look at the new entrance market dynamics. So I'm taking this according to yours. I'm taking it one after the other. So we want to look at new entrants and market dynamics. Emerging fintechs, for example, like the OPay, TeamApt, Now, and Number. They offer very fast mobile first banking services by the artificial intelligence, blockchain, as well as data analytics. The other one we want to look at is the digital first. We want to see that prioritize the mobile users, especially younger tech-savvy customers. Apart from that, we look at democratizing finance. Tools like digital wallets, broaden access to finance for bank users. And apart from all this, we still have market disruption. This entrance challenge banks, and it has been creating more competition. The technology adoption will enable personalized experience, automated support, as well as secured transactions. In the area of regulatory support, the central banks has been creating rules that enable innovation and protect the customers. And at this stage, we need to have what the bank response. For the traditional bank, they have now been seen that they accelerate their own digital upgrade and also partner with fintechs. Then what are the strategies to stay competitive? Number one, we embrace technology. The use of AI for service automation, blockchain for secure records, and data for customers' insight. Also, we want a form of partnership where we need to collaborate with fintechs to launch new services and expand reach. Also, we look at customer-centered focus. This one will also offer personalized digital service, chatbots, and user-friendly platform. Now, how do we promote financial inclusion? It's by provision of services like micro loans, low-cost accounts, as well as financial literacy programs in underserved areas. That's why you see most of the banks nowadays that they go to remote areas to support most of the micro loans, going there to tell them that these are what, and they now try to give them these local people, they want to give them information on how they can access most of these micro loans. And another one is that another strategy that to stay competitive is in the area of want to see that there is there is trust and compliance. The banks now should invest in cybersecurity, follow data regulations, and be transparent with their customers. And the other one is the area of sustainability and ESG initiatives. We need to offer green finance products to promote digital over paper and be able to educate the users on sustainable investment. Before we leave here also, I need to give a key takeaways. And that has always been the way I give my lectures. Immediately I finish a particular chapter, I want us to see or to know what we have learned. So we talk about fintechs, that they are reshaping agency banking with fast, tech-driven, and inclusive solutions. We also talk about new players they are so agile and innovative because they made us to be able to use mobile techs like the AI and blockchain to gain market shares. When it comes to the use of traditional banks, they said that they must evolve. They should adopt tech and prioritize user experience so that they too be able to stay competitive. And also, we talk about partnership, personalization, and financial inclusion. We say that they are very, very essential strategies for our agency banking. And the last one is that we talk about the future of banking, that the future of banking is digital, inclusiveness, customer-centric, and sustainable. Sustainability. Those are the things we just talked about. The topic we just framed. Then the next topic is, out of the seven, is the cultural shift in banking. The way we are going to look at this, that we are going to also look at changing customer behavior, and I'm going to also break them down into sections. So I'm going to look about 4 sections, and that's how you are going to see it also in your pack. Now, the first thing that we want to know is that what is even happening? What is happening when we are talking about digital banking? There is digital banking boom now. Then what is happening? Customers now prefer online and mobile banking over visiting physical branches. Why? Why do they do that? Why do we do that? The reason is that smartphones, and it is convenient because of the services of what we call the 24/7 era. Across all generations, both the Gen Z, the oldies, all of us now can now access these particular services 24/7. An example is that when you see an older people using mobile app, for example, I need to mention banks here, like the GT or CUDA, just like Gen Z, who prefer digital first experience. You know, the Gen Z, they prefer papa, they want to go. That's it. So the old users now are now used to mobile apps so that they can be able to make their transaction to be fast as possible. Now, rise of personalization. When we talk about rising of personalization, what's also happening here? People now expect tailored services, not generic products. Why? Why should they? So because they expect that there's data analytics that will help banks to understand customers' habits and preference. We also need to make an example. Bank offer personalized loan limits based on customer financial behavior. The services that the personalized services that Access Bank is providing is based on customers' financial behavior. So let's look at eco and socially aware banking. What's also happening here? Customers now favor banks that care about sustainability and community impact. Why? Because they see that there is global awareness around climate change investing. EcoBank supports green energy loans. Customers now value that alignment. Another area is the push for financial literacy. What's also happening? Customers want to understand banking, not just use it. They want to understand the banking, not that because they want to use it. No. So then why? Why do they also need this? It's because they want they want the customers to be empowered so that they will now have a better financial decision and loyalty. Example, I need to mention banks, First Bank Financial Education Program on budgeting and saving services. These are what some of these banks have been doing. Then let's look at trust and convenience. Trust through security and transparency. Customers now wanted from this our agency banking. Then I said here also that what's happening? Why cyber threat is rising? Customers too, they are demanding for strong data protection and honest communication. If you want to, if you want to have a change of interest, you need to tell your customer. You need to inform them. This is what we want to do. You must be able to tell them on time. Not that when you now raise this interest and the customers are now being charged, the customer now realize, why am I paying so high? You're now saying it's because our interest has just been changed. No, you ought to have told them. That's the area where we are talking about honest communication. And why do we have to know this? Because trust is key to digital adoption. If you don't have trust, you will not be able to adoption at all. Then example is when we look at UBA that highlights its multi-layered security on its apps and explain data used clearly to their customers. Another area is in the area of when we say that convenience is king. What's happening here? Ease of banking. Major factors in choosing a particular bank. Why? Because busy lives need quick, intuitive, and mobile-friendly services. So here now we can have a very good example is OPay or PalmPay. OPay or PalmPay apps that let users open accounts in minutes, make instant transfer, and access a digital wallet. So you don't need to go to visit any bank, visit any OPay office or PalmPay office before you can open your account. And do that online. Then let's quickly look at the cultural impact on banking. Here we are talking about diversity and inclusion. And what's also happening here? Banks are tailoring services to fit different cultural values. Why do we need these two? It's to serve diverse customers basis better. Example is Islamic banking product at today's bank that is aligned with specific religious beliefs. And the gig economy and remote work. Here, I also ask what is happening. Freelancers and remote workers need flexible banking options. Why? It's because income is variable and not monthly. Because they need their money are being paid at some are being paid weekly, some are being paid by weekly, while some are paid monthly. So they need all this. And an example is Kuda. Kuda, for example, allows gig workers to save in flexible ways without monthly charges. And let's quickly look at globalization and cross-border banking. What's happening? People and businesses demand seamless international banking. Why? Because many customers now live or operate across borders. Some are living in another country, and some are living far away. So, because of this, we need to have seamless international banking. People, an example, okay, let me take an example like the Payoneer and Fruitwave. This one has enabled global transaction with multiple currency accounts and a smooth user experience. I could remember sometimes when I want to transfer money to my boy from my bank, I applied. They said they want to help me to bid for pounds. The thing went on for over 9 months, and the rate of naira continued increasing against the pounds. But someone now said, why don't you use flute wave? And this one I know very costly, but at least I can move naira directly to my boy then. So this is one of the importance of this AI and tech in JC banking. Then let's quickly look at culturally sensitive marketing. Here also I said what is happening. Banks are learning to market without offending and to connect deeply with local values. I said that, and I also said why. Because we want to see representation, inclusivity that are being built through stronger customer loyalty. And the example is the Grameen Foundation that trains agents in local languages and custom to boost trust in underbanked communities. The bottom line here is that modern banking is no longer just about money. It's all about adapting to people's lives, cultures, values, and expectations. So fintech and progressive banks now embrace digital tools, ethical conduct, as well as personalized service. All these are winning the trust and loyalty of our today's customer. That we have finished the first four. Then let's look at regulatory compliance in agency banking. What do we want to study here? Because we are talking about compliance in agency banking. Here, we want to understand why compliance matters for financial stability and trust. We want to get to know key Nigerian regulators like the CBN, the NDIC, EFCC, and the SEC. We want to also identify challenges in staying compliant, especially for smaller or decentralized operations. Also, we want to explore strategic tools that can make compliance management to be better. We also want to appreciate how compliance will boost customers' trust, inclusion and fair competition, as well as recognize the needs for regulators, bank collaborations. Please, are you hearing me? Israel.
Yes, sir, we can hear you, sir.
Yes,
Hello?
we are hearing you. We are
Okay,
hearing
okay. I don't know that.
Yes,
Okay.
we
The
can
fact
hear
that
you,
I'm
sir.
speaking to the waves, no
No, sir.
problem. Now, let's look at the first one. Please, I want all the students to be very, very attentive when we come to this regulatory compliance in agency banking. Please. And that's why I'm now taking another dimension of putting it across to you guys. Now, the first one I said you want to look at, want to understand why compliance matters. So let's take it one after the other. Why regulatory compliance matters? Why is it important? Compliance isn't just about rules. Please note that it's about protecting customers, preventing fraud, and maintaining trust. That's the key thing there. And what are the benefits of compliance? Number one is to prevent money laundering, fraud, and data. Otherwise, most of these what they are known for. Sorry to say. Then number two is that you want to see how these banks will be able to avoid fines or legal trouble. Number next is building customers' loyalty to trust and transparency. Now, let me give an example. A bank that adheres to KYC, which you call know your customer, that guidelines will reduce the risk of fraud and enhance public confidence. Anytime as an agent, you want to open an account for a customer, make sure that you are able to follow the KYC guidelines very, very well. You must follow it so that knowing the house is not even enough. People will go to the house because of the address you get there. You now say, this is the house, and you go away. No, I'm expecting you to go there. If there is any tenant there is this tenant. If there's any tenant there, you can easily talk to this tenant and ask jokingly, sir, when last did you see this our friend? Why I'm saying this is that most of them, they normally borrow homes and take, if you are fraudulently inclined, they will just borrow a particular place, take their energy bill or utility bill to just so that you can be able to attach them to that app. And eventually later you will realize that they are not living. So that KYC is very, very necessary. When you get there, please try and make sure that you see how familiar is this your customer to that environment. When you are going to a particular place and you see people calling, hey, Mr. John, hey, Daddy Truth, all this, you know that this person is well known there. But there are so many, especially in the past, who had made that mistake of taking anything to happen, they are already off. So don't let me waste your time. Let's go to the second one. Who regulates agency banking in Nigeria? So it's a big question. Number one, the Central Bank of Nigeria. What is the work? The overseas licensing defines agent rules as well as ensure customer protection. The Nigerian Deposit Insurance Corporation, on the other hand, the NDIC, they only guarantees deposits and enforces safe banking practices. Somebody was asking me that who is NDIC protecting? Is asking me that question, that who is NDIC protecting? My brothers and sisters, NDIC is protecting the customers.
We can no longer.
That is why. Hello? Are you hearing me?
It's kind of breaking.
We
You
can
can't see your screen.
Okay,
You can't see your screen.
You can't see my screen.
and the screen has been removed.
Oh,
That's for me. I'm coming, please.
Okay. Yeah, let me give you a few times.
Okay, it's back now, sir.
Okay.
You can go on, sir.
Okay, okay. Let me go back. So we are talking about who regulates agency banking, and that's why I was trying to explain the NDIC that though it's guaranteed deposit and enforces safe banking practice, but somebody now was asking me that who is NDIC protecting, and I'm putting it to you that actually the NDIC, they are protecting the customers, especially the small savers. So let me go. And the next one we want to look at is Economic Financial Crime Commission, EFCC. And what are they offering us is that they want to see that they tackle financial crimes like money laundering and also anti-fraud policies. The next one, the Security and Exchange Commission, SEC. They regulate investment markets and they try to see that they ensure there's fair play and they also protect the investors. Now, under this our regulatory environment, is the regulatory environment friendly? This is another thing. Mostly yes, but with caveat. Please note that too. Number one thing you want to know is that enabling, they support financial inclusion and innovation, and also they adjust policies to new tech and trends. But there is what is known as restrictive impact. Non-banks face service limitations. Compliance now can be expensive, especially for startups. Overall, the Nigeria regulatory framework is pro-growth, but needs fine-tuning to reduce burdens and promote innovation. So that is for under the regulatory environment. Then let's go to the third aspect of this our regulatory compliance. The third aspect. The third aspect here I'll be talking about common compliance challenges. Number one, there is constantly changing rules. They constantly change this rule. The regulations evolve fast. Staying current is resource intensive. Almost if there's any new thing that is coming up, the regulatory authorities will start as much as possible to make sure that they put things in the correct perspectives. And another area is in the area of complex legal language. Smaller banks struggle to interpret or implement intricate legalese. And three, decentralized agents. Decentralized agents, they always find it difficult to monitor remote agents to ensure they all follow the rules. And number four is that there is high cost. Hiring compliance officers, training agents, or buying cybersecurity tools. All this add up to issues. And as a result, they now realize that to make this compliance possible, it is very, very costly. And another area we want to look at is the area of cyber threats. More digital services, when you have more digital services, you are prone to more risk. And compliance requires strong cyber defense. So you need this. You know that there is cyber threat. You must make sure that you put strong, very strong cyber defense that will not allow these smart guys to enter into your system. Example is that maybe a mobile money operator may struggle to train thousands of field agents on the latest CBN policy updates, while also investing in cyber security. So these are just the issues. Okay, let's look at the strategies for these agent banking to stay compliant. Number one, they must stay updated. There must be regular training and alerts on regulatory changes. Number two is that there must be oversight systems, central dashboard to track agent compliance. If you are in a particular place as the sole agent, And you have you must have a central dashboard that will be tracking all their work and whether they are complying with all this regulatory compliance. And another thing is that you must have what is known as smart tech, the use of AI, cloud tools, and digital forms to automate checks. These are the things you need, these are the strategies you need to put on board. And fourthly, there must be cybersecurity focus. You should try as much as possible to invest in encryption, fraud detection, and secured platforms. And here we need to say here quickly that we need the collaboration key. Collaboration, especially the regulators and the banks, must work together to balance innovation with security. So before I end this particular, like I told you, I normally have my takeaways. Let me quickly summarize this regulatory compliance. Now, the key aspect we want to look at is I've done in such a way that will make it simpler. The key aspect now we want to look at purpose, main regulators, challenges, strategies, and impact. Now, for the purpose, the takeaway here is the purpose is that they want to prevent fraud, they want to build trust, as well as avoid penalties. Number two, who are the main regulators? The main regulators are CBN, NDIC, EFCC, and SEC. What are the challenges? The takeaway is that there is fast-changing rules, complexity, high cost, and decentralized agents. Now, what are the strategies? The strategies are the use of tech, training of staff, monitoring the agents, and you must be able to see that you collaborate with the regulators. And what are the impacts? We are expecting a safer, more inclusive, and trusted banking system. These are I have summarized all what I've said under regulatory compliance now. I have summarized it for you. Now, let's go to the sixth aspect of this part. This is our course. Major banking regulations in agency banking. I have also done it the way I've looked at the regulatory compliance because these are the key areas that we need to know under this our course. Now, what we want to look at under these major banking regulations in agency banking is that, number one, we want to understand why banking regulations exist and how they prevent crisis. Number two, we look at core regulatory areas. We look at capital, liquidity, risk, AML, as well as customer protection. And also we go forward to learn how Nigeria's regulatory system, I mean the CBN, DIC, and the others, ensure compliance. We now try to explore regulations unique to agency banking. We want to look at the agent's rules, transactions limits, due diligence, as well as risk controls. I want to also grasp how to build effective compliance framework using policies, training, risk assessment, as well as audits. Now, I will now be taking it one after the other, the way I've been doing it. I want to look at overview of the banking regulations. Why do they matter? Banking regulations exist to protect the customers and ensure there is fair play among banks, and they also want to see that the banking institutions avoid the financial collapse. Where they come from, most rules were born from past financial crises and have since evolved to manage modern risk. What are the core components? Number one, capital and liquidity. Banks must keep enough money to absorb losses and cover withdrawals. Number two, risk management. We must see that there is identification and control credit, operational and market risk. Third is that AMFL and CTF, what are they there to do is to prevent money laundering and terrorism financing. And I could remember when we were in the bank, whenever you see any money, any transfer that is coming from Iraq, Iran, Pakistan, we must open our eyes. So, because we know that when you see them transferring money from most of these countries, sorry to say, most of them are coming from terrorism. So it's terrorists that are financing, that are trying to finance terrorism in Nigeria, and they will be sending money to people. And as a result, quickly we must alert the authority that this particular person, either it is genuine or not, the first thing for you to do is to alert the authority so that you can prevent terrorism from happening from its startup. So you must be able to make sure that you let the authority be aware. So they are the one that will now investigate and see whether that person is doing any business that is not fraudulent or that is not financing terrorism. Now let's go to the next one, which is consumer protection. We must ensure there's transparency, resolve complaints, and secure data. And the next one is fair competition. Here we want to see that we prevent monopolies and we allow small banks to compete. We should allow these small banks to compete with the bigger ones. And let's look at the example I want to tell you here is, after the 2008 global crisis, regulators enforced stricter capital rules to ensure banks will survive future shocks. And that's when these are our Basel 1, Basel 2, Basel 3, why they came up. And some of us then were even not happy that some of our banks where we are working there collapsed as a result of not meeting the minimum share capital of 25 billion. If you see then, you realize that most of the banks abroad, if they convert their capital, minimum capital requirement, if they convert it to Naira, we realize that we cannot be able to compete favorably. And that is the beginning of that our margin of this bank when some of the when almost all the banks capital requirements raised to 25 billion. Most of these foreign banks, especially most of these very small banks, their own share capital, if we converted it to our own Naira, it is above 20 billion. And then we are having maybe about 250 million, bringing up establishing a bank. So, and that was the purpose why this want our country, our own financial institutions to be able to compete favorably with those banks outside. And like I told you, the example is after the 2008 global crisis, and the regulators now enforce stricter capital rules to ensure that banks could survive future shocks. That's one, and be able to compete favorably with banks outside Nigeria. Then let's look at the second part. This is the regulations specific to agency banking. Let's take it this way. Agent management. Let's look at that. Agents are third-party reps. Think of them as the bank's ambassador. Regulations to them require, number one, vetting for trustworthiness and financial capacity. Number two, proper training in banking procedures and ethics. And number three is ongoing monitoring and compliance checks. This now brings us to transactions limits. To prevent fraud while enabling access, limits are set based on, number one, transaction types. For example, maybe deposit versus loan. Then number two is local risk level. And number three is customer and agent profile. Example is when a rural agent might have a 50,000 daily withdrawal limit to reduce risk of loss or fraud. That's just an example. Then customer due diligence, the CDD. Banks must verify customers' identities and understand their financial behavior. What do they need to do is by helping them to prevent fraud and tailor their services. And number two is that we should include ID checks, risk profiling, and monitoring. This will lead us also to risk management in agency banking. We have three keys to this. Number one, we're having three key risk types here. Number one is operational risk. When we look at downtime, cash shortfalls, as well as technical failure. Maybe you may want to withdraw, you now realize that the operational risk is there. You say no network. Say the technology they are even using may fail. So the next one is financial risk. Most of the agents normally have liquidity issues, and this may lead to delayed settlement. Also, there may also be compliance risk. That is, they are unable to meet AML and KYC rules. And what are the tools to reduce this? We must be able to try as much as possible to make sure that we are backing up the system, look at agent liquidity policies, and as well as we have to do what is known as remote audits. From this, we now go to compliance framework and best practices. I also schedule it to policy development. There must be clear internal policies that will help staff to follow the rules and guide compliance behavior. Now we must be able to see that we regularly do our updates for new laws or risks. And when it comes to the issue of employees training and awareness, you should tailor training for rules. Not that you are training for training's sake. No, the training must be for rules. Maybe, for example, we want to train the field agents versus IT staff, for example. We try to train them. And another one is ongoing refresher, keep compliance top of our mind. Must be making sure that we are doing the refreshers to keep compliance at the top of our mind. And the example is that the agents should be able to see that they are being trained on how to spot fake IDs or report suspicious transactions. At times, people may give you fake IDs. And that is why I like the Nigerian government now. We're having only one single means of identification now that is more better than no. And it is global in Nigeria. If you want to do any identification they want you to do, the first thing they will ask you to do when it comes to identification is that particular one. That each bank, if you open any bank today, they will require it. If you want to do any transaction that is related to money, they will require it. Can anybody tell me that particular identification, anybody, that must be required anywhere you go, the first thing, and when you look at it,
is NIN.
Thank you, my brother. That is the best thing, because you cannot fake it. You can't fake it, because whenever you are doing it, if you do it for a particular bank, that number that has been generated is the bank that will always appear in all other banks that you are opening in Nigeria. So that's one of the things I give to the CBN when they are not insisting that all our transactions should go through that particular identification. And it has been one of the very good achievements of the central bank when it comes to banking. So agents should be trained on how to spot fake IDs. So the training is already there. Now, report suspicious transactions, and if there is any suspicious transactions, please, you must be able to let the authority be aware. Like I told you, I don't know whether it's still happening. But during our days, anytime we see any money that is coming from this terrorism back their countries, we always try to raise our eyebrows and be able to report to the authority. So also, when it comes to the issue of agency banking, if you see anybody that is bringing in money from maybe these particular countries, please alert the authority. Then let's quickly look at risk assessment. Banks should now map out where compliance risks will exist. E.g., where it normally exists is remote locations. And also they must be able to monitor trends like the cyber threats or changes in customers' behavior. And number last under the risk assessment is you must run simulations to plan for potential issues. You can do it. You can run simulation. How do you run simulation? You can just do and see that maybe somebody is bringing in good money. You can simulate it and see will be the potential issues that may result to this. And so that when you have done this type of simulation and if it is coming in reality, you'll be able to know how to update. Then another thing we need to do here is audit and reviews. Internal audits very, very necessary so that you'll be able to catch any issue that's cropping up as early as possible. The next one will be external audit that will ensure that independent checks are now coming up. The external audits, they are not our staff, and they are coming from outside, so that they will now be able to have independent checks on the transactions. And the next one is for us to report track compliance breaches. We should be able to measure the progress. Our takeaway again this time around, let me firstly summarize it. I'm going to summarize it also by breaking into areas and our key points. Number one, I'm going to look at the purpose, the regulatory pillars, the Nigeria oversights, the agency banking focus, as well as compliance tools. When it comes to the area of purpose, we want to see that we ensure there is safety, trust, and fair access in banking. Then for regulatory pillars, we want to look at capital, liquidity, risk, AML or CTF, consumers protection. And when it comes to the area of Nigeria's oversight, this one must be led by CBN, NDIC, EFCC, and SEC. Then the agency banking focus now will be agent rules, transactions limit, customer due diligence, risk control. These are the ones that will be under the agency banking focus. Therefore, compliance tools will be looking at the policies, training, risk assessment, as well as internal and external audit. While our final takeaway now will be the regulations must ensure that banks don't collapse, customers aren't exploited, and financial system always stay stable. And while agency banking opens doors for financial inclusion, but must be managed with tight compliance. And an effective compliance strategy is like a three-legged stool. A three-legged stool. Number one, clear rules, train staff, and ongoing checks. For Nigeria, the agency model has helped reach the unbanked, and strong regulations keep that momentum to be safe and sustainable. And finally, the last section of our course today is the changing business model in agency banking. What are we going to look at here? We are going to see how we want to understand agency banking models, how they have evolved over time. We want to learn how innovation and technology like the mobile apps and AI-enhanced services. We will also explore global case studies like Brazil, Kenya, India, Europe, and Nigeria for real-world inspiration. Here, I'm going to be very, very short so that I don't time too much. Then we'll now look at Fintech role in promoting financial inclusion. And we'll now look at the transition from transaction-based to a relationship-focused banking models. So let's take it one after the other. The first one is from access to relationship, how agency banking has evolved. Agency banking began as a way to bring basic banking services, cash in and out, transfers to rural or remote areas using local agents like shopkeepers and even personal person who is doing their own business. In most cases, most of these agents banking we are having, they don't really have to have a specific office. Somebody who is doing a side hustle in a particular shop can also be involved. So over time, with tech advancements, it has started growing into a more sophisticated customer-focused system. Now let's look at the key shift in evolution. Then, transactions focus. Please listen. Then, transaction focus. That is cash-based access point. That's what we have. But now, relational model, trust building, tailored services via tech. Let me give you an example. An agent in a village may now help clients open accounts, apply for loans, or access digital financial literacy tools, all via mobile devices. Without visiting anywhere, the agent will assist this customer to do all these things. For example, when they want to apply for loan, do all these things for her, and the money will be paid. Excuse me. The next one is we want to look at innovation in action, adapting with the technology. That's the next one we want to look at. Now, technology is transforming agency banking from basic service extension to a smart one that is responsive to banking model. What are the major innovations? Number one, mobile tech, that is real-time transactions via phone apps. Number two is the AIML that can be used to predict services based on customers' behavior. And number next is social impact, microloans, agri-finance, and inclusive products for women and low-income households. These are the major innovations that are coming up into agency banking. And what are the impacts? Number one is we are expecting it to be faster, smarter services are being expected. And number next impact is that it's going to reduce risk through data analysis. And number next is empowerment of marginalized population. All those guys that believe that they have been marginalized, banking has been brought to their doorstep. Then the next one is global case studies, lessons from around the world. Then look at Brazil. We want to look at local businesses plus big bank, which will be big rich. How do we do it? Banks partnered with post office and shops. That's what is applicable and obtainable in Brazil. Banks are partnering with post office and shops. And the result is that there is deep rural reach, greater trust, and increased savings through credit uptake. In Kenya, that's the M-Pesa mobile revolution. It's a very good, if you read that part very well, I explained so much on the M-Pesa there. And I'm telling you that it's really given a revolutionary development when it comes to the use of mobile banking in Kenya. What have we been seeing in Kenya is that they turned phones into banking tools. They have turned their phones into banking tools. Then they have been expanding access and improved financial literacy across all rural places in Kenya. And let's look at India. India, they have been using their microfinance as an agency banking. So what they have been doing is that their banks and their microfinance institutions, they have been using it to reach the rural women and low-income groups, and they have been able to empower women through microloans and savings. In Europe, we are looking at digital agencies have taken over in Europe. So there we are having online banking platforms domination. Physical branches become advisory hubs. So now we are now having tech plus human touch coexist in Europe. And in Nigeria, that's our Bunge country. Fintech for inclusion, that's the one we have been doing. We are having fintech that have been partnering with banks to offer mobile transfers, micro loans, and digital savings. What has been our result? Our result has been wider reach, there's better money management, and there is growing financial literacy all over Nigeria. Let's look at our limitation in Nigeria, since it is our own model, the limitation in Nigeria's model, and now we can improve it. We are having various challenges in Nigeria. One of our challenges is limited services. Mostly cash-based, lack tailored investment products. That's one of our limitations. And number two challenges is high fees, especially in rural areas. Most of them are charging arbitrary fees. There was a time I was traveling to attend a conference around the Kogi State, and I wanted to buy fuel, and the guy said that they are not going to take transfers. So, and I want to get car. There was this POS standing by the petrol station, and I approached this guy. This guy was telling me that if I want to take 5,000 naira, it's going to be 1,000. Very funny. 5,000 naira, 1,000, 10,000 naira, 2,000, and I want to buy fuel of 30,000. See, so I have to pay about I think I paid 6,000 extra. So I have to transfer 36,000 naira to them. So these are one of the disadvantages we are having when it comes to the area of high fees. These are agent banks that are in the rural area. They have been using their existence to unnecessarily siphon money from the populace. So let's go on. Then the another one is the tech issues. POS stroke network downtime affects trust. They say, which type of POS are you using? Whatever. So these are the letting people to have lack of trust from some of these POS users. Then skepticism. Some people still distrust digital system. And last challenges is financial literacy gap. Most of the agents often lack training to educate their clients. What are the solutions? We're expecting expansion services, for example, goal-based services, savings, as well as insurance. Number two is that should make fees transparent and affordable. Number next is must invest in stronger tech infrastructure. And lastly, you should be able to offer personalized financial education beyond the basics. Now, the future and the quality, not just access. That's what we want now, the future. What are we, the future, what do we expect? We want quality and not just access. So, while Nigeria's agency banking model has made major strides in access, the next step is value. So what do we need? We need deeper financial products, loans, investments. Those are the example. Then we want inclusive, trust-building services, as well as smart tech for reliability. And lastly, we want personalized support for first-time users. Before I end this particular session, let me quickly take you through the takeaway change business models. What are we looking at? We want to look at agency banking as it is being evolved, tech leads, innovation, case studies show successes. Nigeria fintech boom is promising and the future is hybrid. What it means is that from access only to tailored tech-enabled services, mobile, artificial intelligence, and fintech are reshaping delivery. And our case studies, we have used Brazil, Kenya, India, the European Union as offering blueprints for inclusion. On the Nigerian fintech boom is promising, but needs quality, reliability, and deeper education. And while the future is hybrid, what we are expecting is that digital, digital first, but grounded in trust and community ties. Thank you very much. I hope I've made your day.
Thanks so much, Doctor.
Yeah,
I really appreciate, sir.
you're
So I would
welcome.
like to ask, does anyone ask a question for Doctor? Please, if you have any question, please raise up your hand so we can do it orderly, not ask like a mass question. So we'll do one by one. So please, if you have any question, please raise up your electronics and call your name. So no one's raised up his hand. So I
Okay.
guess no one's asking any question.
And I don't want to ask questions. Because if I ask questions, I will have to provide. So don't worry. Thank you very much. You are welcome. Have a
Thank
blessed day.
you too, sir.
Thank you.
Thank very much,
Okay.
sir.
Yeah, you are welcome. Thanks.
So, so I would like to thank everyone for spending part of their time this weekend to join the first start session for intermediate class. I would like to say thank you from myself and to the FIC board members. So thank you very much. And one more thing, please, on Saturday, the session for 10 o'clock, please, is be shifted to maybe 10:45 or so, because we are trying to bring in the Dragnet personnel again to explain how to use the exam platform again. So we'll be coming in from 10 to 10:30 or 10, maximum 10:45. Then after that, we start the proper lecture. So please let's do to join the meeting very early on Saturday. So I'll say thank you. Have a blessed weekend. Thank you very much, everyone.
Thank you, sir.